Hello everyone, Joshua Hayes from BigWaveTrading.com. What an eventful week we just had, but let's just keep it simple. Let's start with the QQQ. On the hourly time frame, we are below the zero line, stair-stepping lower going into Monday. On the SPY, we are well below the zero line, stair-stepping lower going into Monday. On the IWM, on the hourly, same thing. DIA, same thing, stair stepping lower below the zero line. So that's on my most granular, excuse me, time frame with the indices that I track. Now let's go to the daily time frame, which is what basically leads all of my swing positions and tells me how aggressive I should be. If I look at the DIA, we're stair stepping lower below the zero line. Do you see back here when we're below the zero line and stair stepping higher, or above the zero line and stair stepping higher? That's when really great things can happen. See how we're above the zero line, but we are stair stepping lower still at a slow, gradual condition. As long as the market is moving up, price is all that matters. Good things can happen. But when you're stair stepping below the zero line, bad things can happen. And that's kind of what we saw the past week. Nobody that watches these weekend YouTube video lessons should be surprised whatsoever. On the daily, the IWM, similar situation, same situation. QQQ on the daily time frame, taking forever to populate. Thanks, Thinkorswim. We have a bad storm here in Maui right now, guys. Just to let you know. Stair stepping lower, no reprieve there. SPY, stair stepping lower, below the zero line, and we're rolling over price. It just tells me it's completely risk off. Now, not everything's dire out there. I do have some positives. Despite the market stair stepping lower, and despite the QQQ and the SPY looking like this on the daily time frame, which by the way is just not good at all. You'll notice all the distribution bars that are piling up. Going back to the QQQ, there is one. Here are the things I like. Look at this relative strength line in the QQQ. Stair stepping, not stair stepping, but moving higher. Series of higher highs and higher lows. I like to see that. Also, if you go to stockcharts.com, type in accumulation distribution line as an indicator, you will see, despite this market selling off this entire time, that the accumulation and distribution lines are near all-time highs. And until 2 sessions ago, they were at all-time highs, despite the market looking like it is. And the reason for that is, since the top, when you started to pull back, look at all the open bodies and all the reversal wicks at the bottom of the price bar. Now, lately, we started to see some doji candles, and now we gap down and close lower, gapped up but closed lower. That will negatively impact the accumulation distribution line. But it is good to see it near highs. Even if the market pulls back, if we see those stay near highs, it'll be the exact same situation that we saw during the COVID lows and during the 2025 lows, which makes me hopeful for an end of the year rally. Besides the accumulation distribution line, earnings winners just continue to do really well. They're not clean, they're not easy, they've been choppy. You is one that I'm looking at closely for doing a buy stop. I already have a baby position on with you. Kava, look at this base following its earnings report and turnaround. Circle, not even giving me a pullback to the 9 EMA, not on this chart. Fossil was a recent earnings winner, and then INTT after earnings. Look at all of this accumulation. I mean, this has just been a very impressive market. AAOI is finally pulling in a little bit, but look at how strong it is relative to the market. So these earnings winners give me hope with the accumulation distribution line that when we do clear all this, we can move higher. However, we need panic to have a bottom now, in my opinion. And we don't have that yet in the NAAIM, even though it's down to 66%. Bears are over 45%, I think, on the AAII survey. Seen in fear and greed is an extreme fear, but it's not at zero. But more importantly, the IBD put call, I didn't see any increase in that indicator following the reversal and sell-off yesterday. So it's quite complacent. We'll have to check it out after today's session, not updated yet on Investors Business Daily homepage, but it was at 0.84, and that's just not good enough, basically, for me to call a bottom. And then also that, I've showed you my tickets indicator. It's not, clearly in alignment. So sentiment is not clearly in alignment. And then the most negative item I've seen in the past week, JNK and HYG are completely rolling over. Now, they look really bad on this chart. Telechart version 7 that I'm showing you guys does not adjust after the dividends. If you go to stockcharts.com, you'll actually see price is near the October-November lows. However, if you just look at the slope of the rollover, look at the red balance of power with the distribution, um, you can see what might occur. Doesn't mean it has to occur, but that's what could happen. But these are definitely not looking good and definitely very, very concerning to me um, with the overall market. It is good that I'm seeing SanDisk and MU holding up. They are our leaders. Speaking of that, with leaders, TSEM had news recently with LWLG, and we'll go right back to that stock here in a second. But one of the signs that I'm looking at for a potential bottom is how are the sectors that are leading us down looking. So IGV was selling off before the market was selling off. Bitcoin was selling off before the market was selling off, and MAGS was kind of rolling over before the market selling off. Well, they were holding up pretty well until today, coming into today, but it looks like MAGS is trying to re-roll over again, and it looks like the 21 EMA wants to go below the 200 SMA. Never a good condition. Bitcoin had a good session. I saw MicroStrategy today with the volume, but look at the candle. Stuffed right at resistance, closing near the lows on heavy volume. Kind of looks like a churn session at that recent resistance level on Bitcoin. And then IGV hasn't yet, but it's starting to get that rollover look. So they led us on the way down, and they could continue to lead us on the way down. And I really don't like how bullish USO looks, or corn looks, or DBC, and even DBA is getting involved. I don't like the way these commodity indexes look. I really haven't seen the commodities lead like this in aggregate with the market weakness since that 2000 to 2009 period, and the bullish uptrend in commodities lasted until 2015. So it could be a 6-year commodity bull market. It's possible. Not saying it's going to happen. It just could. And then on that note, heading into next week for momentum, intraday or swing momentum, short term, Stack still looks really ready to go. TPET looks ready to go. EONR has been going, and BATL looks like it's ready for round 3 of the moves higher. So do I have any new long positions I'm going to take this weekend? Well, that's the funny part. I continuously, every day, have at least 1 to 2 to sometimes 3 new long positions I'm going to set orders on. I use a buy stop methodology. They have to trigger to the upside. They're not triggering, but they're not failing their setups either. There was one stock that failed its setup for me today, FPS. I was looking at this one after this attempted breakout to new highs. Following this hammer candle, I put half of my buy stop here, half of it here. Following today's session, that's a failure of this bounce attempt. Those orders are canceled. No trigger, no trade, no losses. That's what we like to see. But considering some of the orders I have on the books, I mean, well, just to let you know, this is what triggered for me today. LB triggered and bought buy stop today, but it's kind of squatted. It didn't follow through or close near the highs. LB has a 99 composite rating, number 31 out of 197 industry groups, so I really like this stock. But following today's squat, with it losing green bot, half of my trailing protective stops go here. The final half go right here. Another name that triggered for me today was NBIS. NBIS catalyst event right here. Held the gap yesterday, got long. So this triggered today. I'll have half my stops here, the final half below this low. And I got to stress this enough. I'm not taking 200% long positions on each. I'm not going all in every signal. I'm risking 1R, so I'm willing to give it room to work. But some of the stocks that I have on the books right now that haven't triggered, OIS, right above these recent highs, pulling back, hasn't failed, still looks good. Order is still on the books. OII, I have buy stops right above this high right here. This hasn't failed, still looks good. Order is on the books. FET, I have orders here and here on the books. Hasn't failed, still looks good. So as long as it's an oil and gas name, as long as it has a strong industry group and composite rating, I'm willing to go long. Now, with these great earnings reports and catalyst events, I'm willing to get long the best of the best. But once again, because I live on Maui, I'm not going to do the Bible gap ups. I'm not waking up 3:30 in the morning to trade the NYSE Open. It will cause me to miss some trades. But you can see that after day one, if it's a really good catalyst event, it doesn't matter. We get long after the closing price, and we get partake in this 250% plus uptrend. In this market, chances are it's not going to work. But they're not all failing. Some are working. And my biggest position still, which I've told you, I think, for almost 2 weeks now, and by far, is FSLY. This one stock is carrying my entire portfolio. And while I personally don't have my accounts at new highs, they are damn close. And that's saying a lot in this market. But I'm looking at names like FSLY, which then takes me to my one and only trade idea for tomorrow, for Monday, I should say, LWLG. LWLG, look at the volume truncation. Highest volume in a year. Max Green Bop. Relative strength at new highs. Breaking out of a long neglected base going back to October. Normally, in a hot market, because they had news with TSEM, TSEM has a 96 composite, number 11 industry group. LWLG currently has an 84 composite, number 44 industry group, close enough. But with that news with TSEM, this is good enough for me to get long after day one. In this, above 708. In this market, not so much. However, today I had a close enough inside hammer candle. I'm willing to give it a trend join chance. So I'll split my buy stops above 761, the close. So 762 buy stop, limit order at 770 on that one. And then a buy stop at 771, limit order 775 on that one. And I'll be calculating to 590, the low a day of the gap up session. But great catalyst on this day with TSEM, photonics, lights, light wave, optics, love it, love it, love it. But in this market, odds of it working lower. So we'll go and wrap the video up there. Have a great rest of your weekend, everyone. I'll see you back here next Friday.